So let's start off from the introductions. We'll raise our hands too. So I'm Quincy Wilson, and then Mark Cashin. Mark, raise your hand. So Mark and I, we are real estate agents with Cummings and Company Realtors. We operate a real estate team within that brokerage. And then Mike Jenkins. Mike, raise your hand, bud. So Mike Jenkins and his business partner, John Wald, they are go-to lenders. So what we're hoping to do here is just do, a very introductory home buying workshop for anybody who is interested, thinking about getting in the market, maybe just has a little bit more time in their hand right now. So we're going to go through a bunch of different topics ranging from how to get started, some basic, lender topics, things like that. And then again, if you have questions, just chime in, make a comment, and then we'll get to those at the end. All right, sound good? All right, let's get started. So, all right, so here's the agenda for today. So we're going to talk about how real estate works specifically to Maryland, okay? So it works pretty much the same across the whole state. We'll talk about the different types of homes, in relation to condominiums versus houses, things like that. We'll talk about the entire process, different home buyer programs and incentives that as a buyer you can take advantage of. And then we'll talk about the benefits of owning a home versus renting a home. All right, so Mark and I are going to start here, and then Mike will kind of chime in when we get to the lender stuff. Mark, you want me to start from the seller side?
Yeah, I mean, Quincy and I, like you said, we work on a team together. Quincy handles most of our listings, so he deals with most of our sellers, and I handle most of our buyers, people looking to purchase their home. So as we go through, Quincy and I will sort of chime in back and forth. But yeah, if you want to start on the seller side, and then I'll take over.
So understanding, so when you're buying a house, you typically have two real estate agents. So you have one that works for the seller and one works for the buyer. The point of this is very important that you have your own agent, and this slide sort of illustrates why. So as a seller's agent, or you see him referred to as a listing agent, they work primarily, and not primarily, but solely on behalf of the seller. All right, so their responsibility is only to the seller. All right, now when you have your own agent, your own buyer's agent, Mark, you want to speak to this?
Yeah, so just like the seller, the person selling their house has their agent, a buyer should have their own real estate agent whose sole responsibility is to negotiate for you and represent you as the buyer throughout this whole thing. And on this little slide here, you can see some of the things that we do. We help you find a lender if you don't have contact to one. We make sure that we adhere to all of the different dates and deadlines in the contract to make sure that we don't miss anything and end up going into default. Negotiating is a big thing. Everybody knows that we can negotiate on a few different parts of the deal. It's not just about price. And then if there's any issues that come up, we work on your behalf and with you to make sure that we get you the best deal possible. The key to remember is that your buyer's agent has no responsibility towards the seller. So we work directly with you and for you, and they're two separate agents. So that's why it's important to have your own agent responsible for taking care of your issues throughout the whole deal.
Right. And as as a person who primarily does listings, I will say there are a lot more complications that come up on the buyer side, especially if it's your first time. Right. So it's super important to have your own agent on the buyer side.
Yeah, and every deal is going to be different. So it's hard to get into what issues come up usually. But there are always things that come up during it, and it's good to have an experienced agent on your side who can able to navigate that.
So this slide covers, so one unique thing to real estate in Maryland when dealing with real estate agents is we have a concept called dual agency. Every state handles it differently, but in Maryland, you are, as a real estate agent, you cannot represent both buyer and seller at the same time. So what you do have sometimes is a situation called dual agency, where you will have the listing agent, the seller's agent, and then the buyer's agent are working in the same brokerage, okay? So what you need to know that when that happens, first of all, everybody has to agree to that, okay? So there's a separate contract that happens with that. But what the main point of that is, you will see that a lot because, there are a couple of main players, main brokerages in our area. So, but nothing changes. The seller's agent represents the seller, the buyer's agent represents the buyer. So if that happens, if you find yourself in the situation, sign the consent, make sure you understand what's happening, but for all intents and purposes, nothing has really changed.
Right, right. The key to take away from that is, like Quincy said, you will have an agent working directly for you
Right.
at all times. That's the most important part.
And then this just sort of breaks down, kind of just some myths here. What happens? So, Mark, you can probably attest to this. One of the biggest questions we always get from buyers is who pays commission, right? So,
right.
99.9% of the time, the seller will pay the commission. Okay. And then Mark, just interject. I'm going to go on a tangent here, but interject if you need to. So the only time a buyer should ever pay a commission is if you want to buy a for sale by owner, and that owner will not pay an agent commission. In that case, the buyer will pay commission. All right. Now, sometimes you might find yourself in a buyer agency agreement where your real estate agent is charging an amount that is beyond what he's agreed to get paid. You should be on the lookout for that. You should trust the agent you're working with. That should never happen. 99.9% of the time, the buyer will not pay commission.
Right. I mean, that's yeah, absolutely. Just to touch on the that buyer's agreement, and we'll get into that a little later, just what that actually is. But there's a section in there where the agent says what their commission is going to be. So make sure you read that line, and it matches the commission on the house that you're buying. So if my commission is 3%, which mine's 2.5%, but let's say for this example it's 3%, and the listing is only providing 2.5%, and you agree to pay 3%, you can be made to make up that difference. Most agents shouldn't do that. Again, it's in there, so just make sure you read that, and that's why it's important to have that consultation ahead of time. Know your agent, trust your agent, and they should go through all that stuff with you. But yeah, 99.9 repeating, the buyer pays 0 commission.
And then title company. So as a buyer, you do get to choose your own title company. We'll get a little later what a title company does. Most of the time, Mark, you can back me up on this. Usually we're just going to go with the title company that your agent suggests, unless you have a reason to do otherwise.
Sure.
It's worth shopping around a little bit. In my experience, they all pretty much, charge the same fees. And again, we'll get into what they do in a little bit. Mm-hmm. And one key thing to look out for, if you're new to buying a house, you want to make sure that you're signing Maryland Association of Realtors documents. So if what you're signing looks to be, hand typed, made up, not standard, you might want to hold off and have someone else look at this. It's very easy to tell the difference between standardized Maryland Association of Realtors documents and ones that have just been made up on the spot. So,
yep.
Right. All right. Mark, I'm gonna let you take over a little bit here. I'm gonna interject. All right.
Yeah. So this is talking about the different types of homes that we see here across the country, but we're going to talk specifically in Maryland. So just to get it right out of the way, this co-op here on the far right, we don't really have too many of those. Basically, the difference between that is you're buying a share of the building versus a condo where you're buying your unit. But we won't dive too deeply into that. If you do end up looking at a co-op, that's something that you can hear from your agent a little more in depth. But for the purpose of this, we're just going to skip that because we don't really have too many of those here. So what you're going to come across are the two main types of housing, right? Single family home, which is just a home that's not in a high-rise building or a condominium. And they can be either your standalone, your detached houses, or like your townhomes, your standard row homes that we see a lot in the city. They can have an HOA. Each HOA is going to cover different things. So it's going to be very specific to that particular property, what the HOA covers, and each HOA fee is going to be different. So again, that's going to be something that your agent should tell you ahead of time, because that will add to your monthly payment if you buy into a house that has an HOA. And their dues and their bylaws are all going to be different. A condo is probably exactly what you're thinking of. It could be in a high-rise building, typically more of an apartment style. You live in there with a bunch of other people. You're responsible for your unit. You do pay a monthly due, and again, they cover different things: trash removal, exterior building maintenance. And then the condo fee dues are going to be different. They're set by the building specifically. So it's hard to say exactly what they're going to be up front. You'd have to look in the contract and see what those are. Quincy, did you have anything to add?
No, I think you covered. That's pretty straight.
Yeah, again, really, it's going to be case specific. So that's the big thing to take away from this whole thing.
Right.
These are the giant outlines of everything. As you're looking, you'll start to see which type of house you like. Maybe you like a single family home, or maybe you like the security of a condo because there's somebody at the front desk for 24-hour security. There's all different perks to these. So when you find one that you like, just make sure you ask your agent if there's an HOA and what the condo fees are.
Yeah, and the only other thing I would add, and Mike, you can kind of chime in if you want to, is just if you do come across something, a piece of property you like that has an HOA or a condo fee, just make sure you're factoring that fee into your mortgage payment.
Yep.
All right. So
Absolutely.
Yeah.
And we do need to account for HOA fees in terms of your qualifying ratios. But you want to be conscious of that because that's going to be a monthly, annual fee that you're going to have to be required to pay, and you want to account that into your living expenses.
Yeah, and it's going to be based on, the amenities of the building. So depending on where you're looking, there are some condos in the city that have $700 a month or higher condo fees. There are some places, in other parts of the state where they might be $34 a year. So there's a huge gap between what they can be. Just make sure you look at your specific address and talk to your lender about what that adds to your payment. Okay. So we'll talk about the different types of sales. Most of the time, what you will see is a traditional sale. Standard negotiation between the buyer and the seller. There are no liens on the house. Everything is normal, a standard contract, and we go through your typical 30 to 60-day escrow period, your closing period. It's a little bit different now with the times that we're in. We're asking for just a little bit longer to give banks some extra time to get everything squared away. But you can count on basically 45 days is what is normal for a closing period. A short sale is a little bit of a different situation. And again, maybe there might be different parts of this that Mike Arlen can add to this conversation. But just following these points here, basically the owner can't afford their payments anymore. So the seller signs the offer and submits it to their bank, their mortgage holder, to approve the offer. So two people are involved in at least the initial part of the process. We negotiate with the seller, they accept the offer, then that offer has to be signed off on by the bank. And the bank has to approve that amount of money. So typically they're sold as is, meaning we can still do a home inspection, but they won't do any repairs that are generated by those home inspection callouts. And we'll get to the home inspection later. The difference mainly in time between your traditional sale, your 45 to 60-day escrow period, and your short sale can be a period of a couple of months. So on here it says somewhere between 90 and 120 days. Just be cautious of that. Just understand that it's going to take a little longer. So if your time frame doesn't allow for that 120-day escrow period, you maybe want to stay away from short sales. And just the definition here, the term short refers to the loss the bank is taking. Basically, the bank is agreeing to take less than is owed on the home as a way to get that loan written off their books.
That's good.
What did we say, Mike? Sorry.
That's a good piece. That's good to kind of let people know about that one, just because they're very unfamiliar. Short sales and foreclosures seem like very enticing deals, if you want to use that term.
Yeah.
People see those prices on there, they're like, hey, that now looks great, but there's so much more involved on that back end. So it's good to kind of show them where that short part comes from.
Yeah.
Both of those not short processes by any means.
If I can piggyback on that too. Sure. We assume as you're going through and you're searching on a line of houses, if you see a short sale and you see a foreclosure, there's nothing wrong with wanting to see them. In fact, in the searching process, it's probably helpful to see, one or two, just so you kind of get familiar with that territory. But just know, here's a big thing with short sales and foreclosures. If you're going to buy one, you really need to make sure you have the cash to fix it up.
Right.
Because most of these that are being sold, we're going to classify them as not livable. Okay, so meaning you cannot move into them, put your furniture in, and call it a home. They need something. They need a kitchen. They need bathrooms. They need HVAC. So you can get, quote unquote deals, but only if you then have the cash to make the repairs, the renovations that are needed. So just keep that in mind. Like as you see these deals, like Mike said, online, that you think the prices are too good to be true, they probably are, because they're being sold to someone, a rehabber possibly, but someone they're expecting to buy it and then make the renovations themselves.
Yep. Again, just another important reason to have somebody representing you, an agent on your side that you trust, right? So we can absolutely go and see these short sales and foreclosure properties. Like Quincy said, if you have the ability to renovate them, you can get a good deal on these. You just have to know, A, it's going to take longer. You're not going to move in 30 days. And B, once you settle, you will then have some responsibility to not even update the property, but just to renovate it and make it livable. So just know that going into it. If you want to take a look at those, it's always good to have your agent refer you to maybe a contractor to get an idea of what that estimate would be to repair those. Because again, you have to factor that into your cash that's going to be needed at the end of the deal.